Hello, everybody. It's Mark again at TSLA, and I'm happy to report another green day for Tesla, closing at $236.86, which was $3.67 above from yesterday, and a percentage gain of 1.57%. And also, as far as after-hours action, you can see that we're up a little bit. This is mainly due to probably, well, not probably, it's definitely because of Nvidia's earnings coming out very, very well. Nvidia's exuberance in the after hours isn't really equal to that of a quarter ago, where it rallied incredibly high and didn't really sell off as much in the after hours as it did now. I think it sold off about 4% from its after hours high, which cuts the after hours gain about in half. And I believe a quarter ago it only fell maybe like 3%. I mean, not 3%. It only fell about maybe 30% from its high, and then kept on rallying, if I remember correctly. So maybe there is a lot more price into the stock. I really don't believe that's the case. I think every time they report and revise guidance up, Nvidia's stock is essentially getting cheaper when you think about it from a multiples perspective. But the after hours trading isn't over as of yet. We still have how many hours to go? We still have like an hour and a half to go. It's 3:20 p.m. Pacific time on August 23rd, 2023. So thanks so much for joining me. So looking at Tesla, the price action went pretty much how we guessed it kind of would 2 days ago, where you can see from our squiggly green line, we figured, and this isn't line up with the time, of course, but we figured the action would be, for yesterday, up, then down, then flat, then down, and then up to around 240, stopping at 240 and selling off into the close. So I think it went exactly how we guessed yesterday. The other scenarios didn't really play out fully. We had a gap down scenario where if it was to gap down, it would stay red throughout the day. We can get rid of that. The other one was a slight gap up and a sell into the end of the day, if it was more of a kind of a de-risking event. But our original guess was generally pretty much on point. Sans one thing, and we'll talk about that as the news for today. So let's switch over to the browser and we can talk about the shenanigans that happened earlier today. But the first thing when news that is going to be Elon's tweet. Elon posted himself driving the production candidate for the Cybertruck today, and really awesome to see. And what we'll like to do is we'll try to line this up, this 10:38 a.m. to see if this affected the price action with Tesla. But from Jeff Lutz on Twitter, he made mention that the terminology being used for this picture or this caption is production candidate instead of what was typically being called a release candidate. So it's very, I guess it's possible that we are one step closer to going into kind of a full ramp of the Cybertruck, and that could be maybe, let's say, maybe at the end of next month, perhaps, maybe end of September. But the real news that drove the pre-market or really early morning price action was as follows. So a German article from the German-owned Business Insider, who literally hates everything about Tesla and everything about Elon, maybe because they have a vested interest in their own auto manufacturers, and also at the same time, Business Insider does do a lot of paid content. And I'm not saying this is paid content, but let's look at the article. So this is originally a German article, and I just had Google translate it into English for us. So it's going to be not exactly what they're probably wanting it to say, but it says this as follows. The title being much less than claimed, internal documents show how many cars really are really produced in Grünheide. So the snippets are, Tesla states that it produces 5,000 cars in a week. This is something they talked about maybe 1 or 2 quarters ago, maybe back in March. The number is a challenge to German competition. And they went on to mention the cities that are producing the Daimler, Porsche, etc. The only problem is that the US automaker actually produces fewer cars per week, this article says. Internal documents show that Tesla's actual internal production targets are significantly lower. Tesla employees unanimously report that maybe anonymously, I don't know. Tesla employees unanimously report that the number has now been corrected to less than 4,000 vehicles per week due to lack of staff. Tesla left the questionnaire on the subject unanswered. So they reached out, they didn't get an answer. And so They did mention that for about a week they did produce 5,000 vehicles, and we also heard over the course of the summer that they were actually reducing staff in the sense of getting rid of all their temporary workers and only running 2 of the 3 shifts. And so we kind of know that aspect of it. This article says that they're doing around 4,350 cars per week at a maximum, maybe around 870 vehicles a day. Now these are all based off of the pictures I'm about to show you in this article that are this is the workflow for the actual assembly line, and it goes on to show actual the progress of vehicles. You can see that at the top of this screenshot, which is a photo of a screen. So someone definitely is leaking this to the press. So someone doesn't really like Tesla from the inside. Hopefully they'll find this by just the timestamps. They can maybe kind of line it up with their security cameras just being around 10:41 at night, and they can probably figure out when the 692th car of the day was completed. But this 692 out of the 870 target is what they're speaking about. And here's another one where on July 28th there's another screenshot. So this person could be outing themselves if they are on security or CC camera. But let's continue with the article. Production targets are said to have been revised downwards again due to staff. So they say that during the early part or late part of spring, maybe early part of summer, the targets of daily production has started going down. And after some weeks of that or some months of that, perhaps, they had to then reduce again the quota just because there is a lack of staff. You can see here in highlighted area, the reason for reduced targets is said to be blatant lack of staff in the factory. This could be one of 2 things: that they're just firing people because there is no need to produce more cars, or that another thing is that this is the holiday season for Europe and a lot of people are not wanting to work due to that. So it could be either or. It could be a demand problem. It could be a worker problem, and or both. But you can see that this is an article posted about 11 hours ago. So that would be around maybe 2 to 3 a.m., maybe 3 to 4 a.m. my time, which is Pacific. And so we can kind of line up some significant events from today's news and see how it really affected the price action. So let's go back to the chart and we'll look at the extended trading hours for Tesla. And currently we have Tesla at $239.45. So it's kind of stabilizing. We saw Tesla after hours at a peak of around 243. You'll see that in a second. So you saw this sharp peak at 243 and it kind of sold off as Nvidia hasn't been holding its price after hours as strongly as some people might have thought. You can see that it is up around 5% after hours, which was down 4.2% from its high. Anyway, so we know that around 3 to 4 a.m. my time, which would be maybe like 5 o'clock in the morning to 6 o'clock in the morning Eastern. And you can see that here. It started selling at 5 a.m. Eastern time. And from that point on, when the article was released, it dropped back about 4%. Now, as the pre-market kind of got closer to the actual cash open, it did get bought up a little bit, 1% off the lows, and then it actually turned green for the day, closing up around $237. So it actually had a nice recovery. If this is something that you're able to catch in the pre-market, getting yourself in at 226, that would have been a great move. You would have had $10 a share, and it wasn't really strong pullbacks necessarily, except for the end of the day. So you would have been able to get out pretty easily or hold it. That would have been a great pickup. So I don't really give much credence to these hit pieces from Business Insider. I can understand they have some motivation there to slander, quote unquote, and I don't mean that 100%, but they have this desire and motivation to put out these pieces against Elon and Tesla, just because they have a significant auto manufacturing industry that's native to their country. But at the same time, they should consider that Tesla is making factories and expanding that factory in Germany, who hires German people to manufacture cars for the European populace. Now, it doesn't mean that there isn't a demand issue, because the European Union or the European continent is having a much harder time economically maybe the rates are a little bit lower than America, but their economy isn't as strong. And we saw some hits to some pre-market action, not just because of Tesla. And we can look at the SPY for that. Let's look at extended hours trading and take a look at the morning trade, where they had a nice move up, and at around 6 a.m. there was a lot of selling, and so it wasn't just Tesla, but this selling for the rest of the market was really just because the PMIs from across the board, from the PMIs over in Europe, which and the PMIs over in America, have not been so great. And some of these countries are actually in a contraction when it comes to their PMIs, and basically every measure of their services or the manufacturing index in these countries in Europe have been hit much harder than those than that we are experiencing in the United States. But also, I guess China is having similar issues as well. So it really looks like America's stock market could be maybe a direction for if people are looking for some safety. Or maybe our equities would be a little bit more resilient. I think some of that has proven to be true, where the earnings, maybe yes, that they're down year over year, but they are beating estimates. They are still making our mega cap companies are still making a lot of money. They still have free cash flow. They're not in dire straits when it comes to their balance sheets. They still have cash on hand, and they're still spending. OPEX is still obviously a thing, because we can see that from Nvidia's earnings, where they have guided up once again. They not only did they beat, I think they did like $13 billion over the $11 billion, which was a guide up from the previous quarter, from 7 to 11 billion. So essentially in 2 quarters, they essentially just beat by 100%. And they went ahead, also guided up again from 12 to 16 billion for the next quarter. And they did initiate but added on $25 billion to their leftover buyback money. So they feel pretty good about the incoming monies. They feel good because they have a large backlog of orders into next year. And the reason we're talking about Nvidia is because like we mentioned yesterday, the inaction when it comes to Nvidia would really influence how not just the rest of the market, but specifically Tesla would perform today, after hours, and into the next day. The trading for Tesla is usually pretty in line with the Nvidia, the only real other AI name in the industry. So we were talking about, if you wanted to hedge Nvidia, it probably would be better to hedge maybe Tesla or something that doesn't have so much implied volatility, because as you can see from the Nvidia's move now, it's around 5% up from its close, and this would be death to all options holders who bought options. People who bought options maybe are not going to have a great day tomorrow, because number one, those options are very, very expensive. The implied volatility was expecting at least 11% move perhaps, and being this constrained in its move, it makes sense for the market makers. They don't really want to pay anyone out on any calls that they sold to people. And so this is going to be hurting a lot. I think calls inputs will be destroyed unless you're seeing some type of crazy move tomorrow morning, maybe at the open when it's a little bit more liquid. We know Nvidia isn't the most liquid stock in the world, so it could have some problems, but it didn't have problems last quarter when it went up 2,000% after earnings was reported. So we'll see how that progresses, but Nvidia and Tesla are the kind of moving tick for tick in the after hours. But let's go back to non-extended hour. We'll go back to regular trading hours. So we saw how the article affected Tesla in the pre-market. We saw how later on, as the PMIs as PMIs came out for Euro, how it really suppressed the indexes, which were up pretty majorly. I mean, to a point they're up 0.5%. Which is pretty good for the index before the stock market opened. And we also mentioned that around 10:38 a.m., Elon posted himself driving the production candidate for Tesla. So 10:38 a.m., how did that happen here? 10:38. So it would be around here in this candle. And you saw at the low of this candle, it was around $235. And it closed about $1 up. So it had a little bit of a positive momentum in that area, which was around 1 p.m. You can see it here. It had a nice move about 0.5% after that picture was posted. So we can see how there are some catalysts for Tesla, not just broader macroeconomic kind of stuff. But that was a good thing to see because it kind of gives you a little bit more information about how much closer we are to manufacturing or the ramp of the Cybertruck. As we know, we are manufacturing the truck now. I think Sawyer went on to say that he estimates like 8-9 trucks are being made per day at the moment. We don't know what those trucks are really made for, but we do know that they're being shipped all over the country. Even in car, you can even say all over the world because some were sent to New Zealand, but they're being shipped all over the country. We don't know if for what exact reason, because it's not like every corner of this country is gonna need like crash test example that can be done within 1 or 2 locations. So I don't really understand why, other than maybe they're actually preparing for the handover event for the first couple of Cybertrucks, and maybe those are going to be going to employees in different parts of the country. And of course, probably that event will probably be centered in Austin, as they are kind of tweaking the factory, the entrance to most likely be the area where the first Cybertrucks are going to be delivered in that live streaming event, I'm sure. Now, so we saw Tesla have a really nice recovery. I think that we've always said as long as it stays above 225, I would be pretty bullish. I would have went long here if I wanted to add on more shares at that point. But what I did instead is on the open, I just added 1 call into next Friday, and it went up. It went up okay. It wasn't the greatest moves. The options weren't moving again as you expect. When you buy when volatility is high and it crushes throughout the day, even if the stock price moves up, it doesn't move up in the way sometimes that you would really want it to. In the increments that you want it to. But the action is kind of how we guessed. And if I could stretch out this green line, it would kind of match up with the basic idea of what we wanted to see from Tesla, which is a move up from yesterday, consolidation, another move up, and sell off slightly. So we know the level is being respected. 240 is actually still being respected in the after hours. And I know I said it was 243 at the high, but it's still currently below 240. And what we can do is we can take a look at the how the options flow kind of was affected with today's movements, and we can kind of try to remember what they were yesterday. So let's go back to the browser and we'll look at the economic calendar, because volatility is still very possible. Even though we had a great report from Nvidia, we know that the Jackson Hole Summit begins tomorrow and Jerome Powell speaks on Friday, but that doesn't mean there isn't volatility coming from the event tomorrow, and we'll take a look at that in a second. So first things first, here's maximum pain. This is going to be for Tesla, maximumpain.com, and this is Tesla's volume. And we can see how we know 235 was very, very popular. We also know that 230 puts was still popular yesterday and now is today. Maybe one of the reasons why they didn't want it to go below 230 for today's price action, just because maybe there's too many puts in this system. But the reality is we also know that Tesla is mostly calls. Though in this scenario, the put call ratio is actually pretty close to 1. So that means puts have been added into the system. We can see all of that, most likely hedging, just randomly hedging, probably, as you can see, a lot of interest at the 200 strike, even though it doesn't really show up in the volume. It's people trying to grab 200s just as a worst case scenario if Nvidia's earnings went very, very badly. But since there is this spike in the 240 calls as the day was moving on, does this become our ceiling due to those calls? And that's one of the reasons why I did draw the green line to hook under to start going down after 240, because 240 is a level that really rejected hard yesterday. Let's go to the economic calendar. So here's our PMIs. Not so great. A little bit of a contraction on the manufacturing, and I guess it's not too surprising, right? But services is trying to hang in there as much as it can. But it did affect the overall economy when you consider our PMIs mixed in with the European PMIs. Europe is 100% like in a recession. Some countries probably in a depression or something like that. But okay, so we talked about the volatility. We talked about Jackson Hole. So even though we know Jerome Powell speaks on Friday, was it 10 a.m. I believe? Yes, 10 a.m. 10:05 a.m. We do know that. We also know that the Fed officials, other Fed board members, other Fed governors will be speaking from the middle of the morning onwards. So something to keep in mind that whatever they're going to say is definitely going to affect the market, because people are going to try to front run the message that Jerome Powell is going to deliver. Now, we all know that last year it was horrible. The Jackson Hole event, and I'm still seeing on Twitter now, like, oh, Jackson Hole, no one cares about Jackson Hole. It's a non-event event, and that's not the case, because last year people were saying the same thing. And yes, I understand that maybe for the past like X number of years, no one's looking and caring about Jackson Hole, but now we understand that it is just another time to deliver a message to investors, to the market, when we don't have a lot of communication from the Fed. And this is their opportunity to kind of interject a little bit if they think the market is getting a little bit out of hand. I don't think they really care about the market per se, but it is one of the factors that goes into how are they seeing the contraction of the economic activity. If the market's going up really high, isn't that a loosening of economic conditions? Possibly so. But I think we had a really great pullback, and that kind of lines up really well, hopefully, for the Fed governors, for Powell to look at that piece of data and say, okay, I mean, people are pricing in rates that will stay higher for longer. Maybe we don't get a rate hike in September, but the reality is, for that, we all have to digest, is that in an environment, if we don't get cuts this year or early next year, how do individual consumers like you and me survive when rates are floating anywhere from 5 to 6% for over a year? And how do companies who don't have the balance sheets survive that type of economic environment? We don't know, and that's why the market can be pretty choppy. And it's been choppy, I know, over a year now. It's been a horrible market to trade, and it catches bears and bulls offsides, and it catches them quickly offsides wrong. They're wrong a lot of the time. I mean, we're talking about some of the biggest hedge funds going under because they just don't know what to do. We have people that are so-called like the bond traders, are like quote unquote like the best traders in the world, and they're getting their butts kicked from January onward. From the flows into bonds, they are getting destroyed. And we'll look at bonds in a second. We talked about how it's possible that maybe there's a bottom in that bond, in the bond world, possibly. But we know that this type of market is completely unpredictable. We never had anything like this in our history, where we have inflation that's coming down. The rates are still really, really high, but employment is really, really high, and earnings are being beaten. And I mean, expectations are being beaten when it comes to earnings, and somehow we're staying afloat, right? But afloat doesn't mean growth. I mean, we have contraction in revenue for companies. There's even to the likes of Apple. I believe Apple's even red after hours at this very moment in time. And so, like, the uncertainty is going to be really problematic, right? I think over the course of the rest of the year. I just don't think we'll get the clarity that we want until you see core inflation come down in some type of considerable way. And it could be fine. I mean, maybe when we get into the fall and we were seeing, oil prices kind of taper a little bit, maybe so that doesn't really have that effect that we talked about a couple of weeks ago, that energy prices will start getting worked into this inflation calculation and really start showing an increase in inflation. Although I think current estimates are going to show that PCE actually might be recording inflation a little bit higher than CPI, so the market's kind of pricing that in as well. Let's go back to the chart for the market, and we'll kind of look at some things that really affected not just Tesla's price action, but the market's price action. And we talked about TLT yesterday. This is the long bond ETF, and so this bond ETF goes up when yields go down, And you can see it had a very sizable move to essentially where we thought it would stop at. So we figured that it would make a move. We drew a line that this makes sense. Around 95.50 is where I put it. And it kind of stopped its gains there. Now the question is, if there's going to be a sell-off in the ETF, or basically people taking profit when it comes to this bond move, are yields going to go back up, bringing the ETF down? Perhaps, but understand if the yields do go up, that of course will affect equities. At the same time, people can be further going into the ETF tomorrow as a way to hedge the volatility of Fed speakers and Jerome Powell over the next 2 days. And so why get into bonds? Well, if it's not really getting into the ETF per se, but it's people and institutions actually buying bonds, lowering the yield further, so they're not fully exposed to the equity market, and they're just sitting some type of almost guaranteed income from their 5% treasury bonds or what have you. We can see that the US 10-year also fell with the long bonds. So the yields on the 10-year dropped pretty considerably, and it really it's making it's at a point where it's going to draw something, right? Are we drawing a head and shoulders pattern like this? So if we are, it will bounce here, or it'll bounce around 4.18, 4.17%, if it really wants to kind of test this pattern. But we do know closing below 425. We talked about 425 being really pivotal. It kind of fell below that, which would have been, I guess, people's first area of defense, but it kind of fell through pretty decisively. So that's a good sign when it comes to equities. We can also see that the VIX is closing lower than it was yesterday, pretty considerably as well. This is a drop of 6%. We still have a gap, and the VIX always likes to fill their gaps. So I like to see the VIX, and if you're bullish, you want to see the VIX just utterly collapse, fill the gap after Jerome Powell speaks this Friday. And that would be a really, really nice move for the markets. You would see I think you would see, Tesla reclaim something like 245 if that was the case, which would be a real relief for a lot of us. But it kind of begs a question. So let's look at Tesla again. And let's say you sold the calls here at 239, let's say. And I think that would have been a great move because it's so close to 240 if you manage to get that sell as far as hedging goes. That would have been decent because your after hours action isn't too drastically bad that you couldn't get out of it. I think after the pricing settles and volatility settles for Nvidia in the morning, if you sold calls, it's very possible that you can actually get out of those calls without much of a loss. But that's really going to be dependent on the rest of this after hours trading. It's going to depend on futures, and it's going to depend on the pre-market action for tomorrow. Nvidia, let's take a quick look at Nvidia. Nvidia is kind of basing here at 500 even. Maybe it can move up from this point. Who knows? But if it does, it's good for Tesla if that's the case. So let's say you weren't hedged with a call, that you maybe bought puts. And I will say this now. We talked about, it's really great that Jerome Powell is speaking on Friday because it gives you an opportunity tomorrow if there's some bullishness in the open. I think the open is going to be pretty important because you want to, if the hedge, for me, and this is not financial advice for you guys, but I'm talking about for me, if I was to think about further hedging my positions, buying a 1 day to expiration option, so Thursday expiring on Friday, could be relatively cheap before the Fed speaker starts speaking at 10 o'clock Eastern time. That could be your opportunity if it's really bullish in the morning to try to get a hedge in, maybe one hedge, just something. Since it's 1 day to expiration, it would be very, very volatile if it was to drop severely on Jerome Powell. But at the same time, if you have access to 0 day to expiration options trading, this is not a financial advice at all because we know people basically 95% of the time lose money when they trade 0 day to expiration options. But if it comes into Friday morning and you aren't hedged, okay, you have around 35 minutes in the morning from the open to kind of figure it out what you really want to do. And that's really also going to depend on how the action looks in the morning. You want a good entry. So if the action is really, really bullish again on Friday morning, maybe you can get the hedge in before Jerome Powell speaks, but just know that everyone else is doing that. So the volatility could be high even though price is high, right? So let's say price is stable for the market for Tesla tomorrow, on Friday morning. If the volatility is high, and you can just watch the VIX, always have VIX up. If the volatility is high and it starts collapsing because it gets even more bullish as he speaks, maybe has a very dovish tone, and the only thing he talks about is that we had decent data come in. Maybe we don't need hikes, and not in those words, but if that's the implication, then the volatility would destroy itself, and then your hedges might not be that great, even if it was to sell. If it was to sell, the hedges won't really work that well if the volatility crushes. We saw that last Friday where the VIX was red, stocks went red, and it kind of hurts the premium of even puts, unfortunately. Another way to do it, just to get to buy duration, move your puts out to a further expiration. That can always help. Time is very, very important for a price action to work out, because it might give you also a little bit of a buffer when we get into next week's economic data, which are going to be most specifically on the PCE or another inflation reading next week. So that could be good too, a 9/1 expiration on puts, or even further out if you have the resources to do that. As expiration goes out, the premium goes up on these options. So something to think about. But if you sold a call, like I mentioned, you want to get out, I think you might have the opportunity in the morning, unless there's a lot of buying of Nvidia that could really get the whole market moving up. If you see opportunities, just remember, when it comes to covered calls, just treat them like if you're buying a call, if you're buying a put, think of covered calls as something you can get out of, and you can get out of it at a loss perhaps, but you don't have to let it happen to you. You don't have to have shares called away if you don't want it to. But it's always good to be hedged in this environment still, because like I said, volatility is still here. We still have a lot coming in the next week, the next 2 weeks. We'll have another CPI reading before the next FOMC meeting. So maybe we don't get good clarification from Powell on Friday, because we don't have the CPI or the PCE report in as of yet. So he might not speak to anything other than the fact that inflation is moderating, but still sticky when it comes to core, when it comes to shelter. So don't be surprised if it goes that way. And if you want to just kind of stay out of the markets, Fridays aren't really great for trading. So maybe get some duration on your trade, or you can even stay in your covered calls. And just like I said, we talked about upside hedging. If you feel upside's coming, you can always either like hedge your cover calls with a bot call of a closer expiration. But I think that's it for now. I don't really have really great insight as to price action for tomorrow, but let's go ahead and just clear some drawings. We don't need the green thing anymore. I think the green thing played out pretty well. I think the blue is still very relevant. I think the circle area is actually still relevant, where if this continues to hold, this would be a very classic island reversal. So yeah, you have the gap down, consolidation, a gap up, there's your island. It's still moving up. No notable lows have been made. I think the times where you can start getting bearish again are here at the 230 and the 225. If you see closes below that, it's probably not great. It's not a great look for the stock. But for now, I think this could be a bottoming pattern, because it's been a couple days. We haven't made lower lows, but when we do, easy answer, that it could be short again in the future. I'm not saying you need to wait all the way to 228 to go short. I'm just saying when it starts threatening that area, when it starts making notable lower lows, is maybe times when you can consider further hedging if you want, perhaps. But for now, we could be drawing a little cup. So I think the one last thing I want to talk about, I guess, is something I've been looking at, is this pattern. We've been respecting 240, right? And this is obviously because a lot of options are now piling into the 240. Decisive breaks above 240 will be very, very bullish. So it would look like this. This is the cup and handle that we're talking about. So you have the large cup, and now we're drawing the handle, right? and we're at 240-ish again in the after hours. So what do we want to do with this information? What we want to do is, okay, maybe I'll just try to draw something out. If you see a break above 240, you're going to get a test most likely. So it looks something like 242 and down. And the test should be around 240. Can it go below? It can. It's not going to be like an exact science, but you want to see a bounce so it doesn't make a significant low, and then you wanted to see it just go up, right? That's what you want to see. Is it going to happen? Not sure. But that's generally the idea of the cup and handle, where you have basically what a cup and handle is. You're just having 3 test points when it comes to some type of level above, right? So we can see how it, I mean, we'll just draw it out. This is the test for the 240. Okay, we have the test again, and we have now an after hours test again. And so you keep pushing up against the same level. That shows bullishness. There's no other way to really put it, but it also gives it the market a place to pivot, meaning this is very obvious. A fall from here will be a triple top, and that would send it crashing. But since we're not making lower lows and we're making an equal high, it's relatively bullish in a very short-term concept, short-term time frame. So we'll just change the color of these circles for future reference. We can say like, okay, guys, just take a look at this. I want you to draw this on your charts too, because it could play out. So if it breaks above 240 in the morning, it should, the quote unquote healthy move for the market is for it to sell off to around 238, 239, 240. Try not to make a low under 237, because the 237 level would make a short-term low. So we can, hopefully it doesn't go below that. We don't really know what's going to happen tomorrow. If it goes below that, I mean, it's up to you, but I think we're already hedged most likely, right? Because we're hedged going to Nvidia's earnings. So you can't change those hedges now, but that's an opportunity. One thing I wanted to make note of, we talked about Tesla Q or TSLQ, the ETF that's the inverse of Tesla 1-for-1. It's not leveraged, but there is decay to it. So you can't really hold it. There is decay to that type of inverse ETF. But if Tesla's really high tomorrow, I think the level it's going to respect is the gap level, which is 242.50. So 242.50 or higher in the morning, you can actually actively hedge your position with maybe TSLQ, put a stop loss on that if you really want to. So you don't, and it's going to be difficult, I know, because you have to watch it in the morning. Yeah, I don't think most brokerages can let you set a stop loss for shares in the pre-market or after hours trading. But just know that that level of 242 is very important because it is a gap fill. Technically, it filled in the after hours. If you're a technician, I'm not sure how you feel about after hours trading or extended hours trading as far as, the pattern filling gaps and patterns that is. I think it's best to kind of just keep it within the cash market hours. But there's also another level of 245. So we have at the strike prices of 242.50 and 245, conveniently we have gap fills, and those should provide resistance for pricing unless there's some type of great catalyst to send things up or down relatively quickly. Okay, thanks so much, guys, and I'm glad we had another green day, right? All right, take care. Bye.